So hey everyone, thanks for joining us for our Farmer and Food Producer Loans webinar. Today we're just going to chat with Eric Bowman of the Kohala Center and Mary Spadaro of Slow Money. And they're going to talk about various different loan programs and how to qualify for them. And we sent all of the questions that you guys submitted when you signed up for the webinar to them. So they're going to get to some of those. And then if you have any questions, we can definitely stay and talk story a little bit after too, or you can type them in the chat as we go along and we'll make sure that they get addressed by the end. We are recording this session. Most of our farm webinars are more attended online at people's own convenience. So we're recording today. If you ask questions live and you want us to clip that out from the recording, just send Annie or I a little note that you want that trimmed and you want to be private on that, and we can do that for you in the edited version. Otherwise, kind of the whole meeting we like to record because people learn a lot from others' questions. Some people are afraid to ask. So with that, I'm going to start off today with Eric. Eric's from the Kohala Center. And Eric, you want to share your screen and come in?
Absolutely, Megan. Thanks for the introduction. I'm going to see if I get this right here. Excuse me while I bring this up. Are you guys should be seeing my title slide there? Excellent. Well, I really appreciate the invitation to be here to talk about financing your farm and to kind of go over a variety of different loan programs. And I'm going to talk about the Kohala Center, its services, my role within those services, and then also really the hamburger patty, the presentation is going to be reviewing some financing options. So I just have a question for everybody, maybe in the chat box, since we don't have that many people, but I think it would actually be nice just to see your name and to hear where your place is, or somewhere that grounds you, where are you from, where are you now, any other, and then what's an agricultural product or a plant that that you identify with. So if you just want to like pop that in the chat, I'd be grateful. And since I'm presenting, I'm just gonna like take the privilege of sharing mine. Just on a personal note, I'm currently in the Ahupua'a of Pauhau, which is on the Hamakua coast, just Makai of Honoka'a. Many of you are familiar at total different end of the island chain there. And pineapples, I have really good success growing pineapples. I'm about 400 feet at a very dry location, so they do very well. And then I just when I was preparing this and thinking about financing and farms, I thought of my grandfather. It's Roy Bowman. He was born in the late 1800s. It's kind of a long story why I have a grandfather who was so old, but he holds the distinction of losing the family farm during the Great Depression down in the Shenandoah Valley. So, you know, sort of this life multi-generational chain of events that occurs. You know, you lose the farm, people go out into the world, and you kind of lose that connection to the land, as it were. Just a personal intro about myself. I've had a career in food and agriculture, but specifically around alternative and low-income financing and bringing financing to underserved markets. I'm also a volunteer at a native CDFI here in Waimea, Hawaii First, FCU. And I was pulling this together. I pulled a couple pictures. On the far left, that's me doing a USAID project in El Salvador with the Equal Exchange Co-op of cashew growers. And then that was a low-income credit union there in the middle that we tried starting. Thurston Union of Low-Income People, Tulip Credit Union. And then finally, I had several years of experience in commercial real estate, specifically mobile home parks, and where we would bring in a blanket mortgage for the land under the home of basically a trailer park. We don't have those here in Hawaii, but essentially securing tenancy for low-income housing owners. So just give you an idea that I have a broad range of experience as it relates to finance, agriculture, and then underserved markets. So at the Kohala Center, I'm on the business development services team. We provide a beginning farmer and rancher training program that's currently named Ohaha Mahiai, a co-op development. We have a co-op developer on staff. So if there was a group of people who were interested to form a co-op or an existing co-op that needed more training, you'd work with her. That's Tracy Young. We provide grant writing support. Last year, I think we worked on about $5 million in federal grants, and then financing support. That's really where I come in. My role is working with owner operators on debt financing. So that's really what I'm going to be talking about in a minute. So this means I provide business planning, financial modeling, budgeting, and I network clients with a variety of other lenders and government programs, coach them through the application process. And I also manage the Kohala Center's role as a hub for Kiva, which means they're responsible for the market within the islands. And then we're also a lender on Kiva, and I'll talk a little bit more about that in detail. Those are a couple of the clients that I've worked with. That's Shane Castillo there, a flower grower down in Puna, and then a couple of proud gentlemen who have a syrups product. They're actually bartenders. So they have a MacNut Orgeat, and then like calamansi and ube. Their flagship product is like an ube syrup. So in the last year, I've worked pretty closely with the Farm Service Agency, the Office of Hawaiian Affairs, Slow Money Hawaii, American Ag Credit, and Feed the Hunger Fund. And I'll talk a little bit more in detail about all those. So the dynamics of ag, as I transition here talking about like blending into ag, I think is more than most people realize when they're getting into it, very capital intensive. It's very labor intensive, and frequently it's an intergenerational asset. An operating farm could be is a wealth engine for that family that has it, and frequently farmers are stepping into, they're standing on the shoulders of their grandparents or parents, or they're building this farm as a legacy for their children. And it's also, income can be years out if they're planting an orchard crop like breadfruit, coffee, cacao, and it's seasonal. You'll have these liquidity events of harvest where suddenly you've got all this product available, and it's impacted by weather events. And it's been very sensitive to inflation, inputs, transportation costs. I've had a lot of farmers pretty anxious in this environment where fertilizer has been, doubling and tripling in cost. We're at war, and something like 40% or something of the world's phosphorus and fertilizer comes out of Ukraine and Russia. So we've got world events that are really impacting agriculture right now. And I hear this question a lot. People call the Kohala Center almost like ag extension, where they're curious, like, what should I grow? What should I get into? These are kind of our big four, right? Coffee, cattle, flowers, and MacNuts. And I was talking to another lender, and he said there isn't really a recipe. It really just comes down to management, where he'll see two producers of the same type located in the same neighborhood with about the same amount of land. One is really struggling on and on and on with profitability, and one of them is doing quite well. So at the end of the day, I think more important than product is management. If there is a recipe that I see, it's multiple revenue streams. They're not just selling a raw product. They might be doing that. That might be the foundation that they're engaging in, but they're adding value. They're maybe directly marketing at a farmer's market. One of the household members has an off-farm job. Healthcare, oh my gosh, constant need for farmers is healthcare. So there might be a spouse who has off-farm income, hosting farm tours, weddings, other events. Rental income. A lot of farmers have multiple properties on their farm. So I mention all this because, again, all these activities involve money and capital and investment to build out. Ag needs capital, lots of it, to acquire the land, for housing, for their workers, for the farm owner, and capital expenditures for infrastructure, for the equipment, and just for working capital day to day. And I want to hone in on working capital because I talk to a lot of small business owners, and they're really caught off guard by the cash cycle. So they'll have a pile of cash, and then they convert that into a bunch of accounts payable. They go out and they buy fertilizer, fencing, seeds, greenhouses, whatever, and then they convert that to inventory. So they've got, let's just say, a bunch of clamshells full of hydroponic lettuce. Then they ship all that out to a buyer, grocery store. And now they have accounts receivable. So meanwhile, they've got cash. Maybe they start with $10,000 of cash, and that's grown to maybe $50,000 of accounts receivable, but they don't have cash just to pay for their operating. So businesses will find themselves in this pinch where they're growing, they're profitable, but they're going broke. And they're like, "What's happening?" I'm like, "Well, you need to borrow money just to support this working capital, this cash cycle." So that's frequently an area that I find owner operators coming to us for financing. So I want to give a quick scenario of why a farmer might need a loan. A BCS tractor is huge labor saving piece of equipment. Let's just say it's 10,000, new it's about 7,000, some implements, shipping. So let's say it's 10,000. So if you're going to borrow $10,000 for 5 years at 4%. That's 184, let's say $200 a month. So, to get a loan to purchase that equipment, you're matching that expense over the life of the equipment. So I'm sure a BCS tractor was worth more than $200 a month in terms of labor save, profitability, scale. So, I talked to a lot of farmers who are very debt averse. They're like, no, I don't want to borrow any money. I'm very proud. I build everything without debt. And I would ask them, how long is it going to take you to save up $10,000? I mean, personally, it'd take me like years to acquire that, to save that kind of money up. And I've got a pretty good job. So, how much labor could be saved in that period of time? And then what's going to be the impact on the operation? So frequently farmers will require financing for a lot of their equipment. And I'll say a comment on real estate that, many farmers increasingly realize that farmers aren't just in agriculture, they're also in real estate. And a lot of them don't think of it that way, but they are. And real estate has two main sources of value: capitalization or profitability. That's the amount of money that you're generating off the farm. And then finally, appreciation. So, a farmer called me recently, a flower farm, 3 acres, Maui, land prices have just gone psycho during the pandemic on Maui. They needed $100,000 for a packing shed for their flowers. And I just pulled their farm up on Zillow and I was like, well, it looks like you paid $800,000 and now your farm's worth $1.4 million, and the landowner was just aghast at the appreciation that they'd acquired. My answer to her was just go talk to your bank, get a working capital line of credit on your, get a home equity line of credit, or, to finance that. You have all this equity now in the real estate that simply happened through just the course of appreciation during this event of the reshuffle that happened during the pandemic. So I'd point out, farmland is appreciated 4 to 5% a year. And that, you add that, capitalization, farms in general, this is from a mainland kind of American national perspective, have capitalized about a 7% revenue off of that farmland. So, you add that together, you're looking at a 12% return. So farmers are like, I don't want to borrow money at 5%. It's like, well, you're going to be making, 7% in theory on that over the life of that loan. So, if you have an operation and you can borrow money to acquire the land, it's definitely in your long-term benefit to secure tenancy and then gain the values that you would get through appreciation. I'd also point out that real estate, when you own land, there's taxation benefits for farms. You see that a lot too, where landowners maybe have they're generating revenues in other activities, and through having a farm, they're able to defer some of those tax costs through depreciation and just simply by spending money on the farm. So maybe this is a little bit advanced, but just I'm trying to point out that there's kind of 3 main categories here where you're going to seek financing, and there's going to be different lenders and different reasons and different terms, and that's working capital, equipment, capital expenditures, and then real estate financing, mortgage financing. So putting that all together from such a Western perspective made me feel so sick to the stomach because I wanted to remind myself and all of us that, we're not talking just about property and real estate, but we're also talking about Aina, or land, that which feeds. And there's a kuleana with this. I'm getting this definition from Vicky, and I wanted to pause for a moment and just kind of wash my mind out from all this thinking of farmland as just simply this asset that is acquired and generates numbers in a spreadsheet, but point out that I think most of the people who are attending this are thinking about it also from a perspective of, I want to be a farmer, I want to fulfill my stewardship obligations, and I'm trying to grow food and secure our food sovereignty and take care of my community. I mean, that's what I hear from farmers, not that they want to get a certain capitalization rate on the land. So as I was chatting with Megan earlier, there's a capital ladder. The floor of that rests on equity. What are you going to bring to the operation? And as I mentioned, sometimes that's intergenerational and it's inherited. Maybe it's a savings or a retirement account, or it's just sweat equity that's been built by being a farm worker on somebody else's farm. There's a group of micro lenders out there that can provide small pieces of small loans for kind of jump starting a project. Then there's a group of community development lenders, and then there's government lenders, and at the top of that ladder, there's commercial lenders. And I'm just going to kind of walk us up these steps here. And I like the idea of a ladder because some people's legs are very long. They have a lot of equity, a lot of experience, a lot of background, good credit, and some people's legs are very short. They don't have much equity and they don't have much experience in farming and agriculture. And that's why there's those lower rungs on the ladder. So I think one of the main things I wanted to talk about is Kiva. I mentioned previously that the Kohala Center is the hub for Kiva in the islands. And so Kiva is an online lending platform that provides zero interest loans with no collateral requirements. And there's 6 months of no payments for farmers. And the loans average about 8,000, but they have a max of 15,000. They have to be for business use only. And a term that's used in lending is for risk analysis is underwriting. So they use what they call social underwriting, or they don't require a lot of the due diligence materials that a traditional lender would require, because they're kind of counting on you to bring a portion of your personal network into the loan. And I just wanted to share a couple photos there. That's Sierra Lynn there on your island of Kauai, and there's Ho'opili down in his lohi on Maui. They're given the shaka. The Kohala Center is also a lender on the Kiva platform for any applicant who is utilizing one local ingredient and is located in Hawaii. The Hawaii Food Producers Fund will participate up to 50% of the loan. This loan platform the Kohala Center has been active on Kiva for 6 years now, since 2008. So maybe even longer than this. And I think since 2014. So actually 8 years. They've been lending for 8 years. In that time, they've lent to, we just are working on our 88th loan, totaling just under 800,000 in total loan volume to all those borrowers. And we've engaged with over 10,000 community members. So each loan might have about 100 to 150 lenders in it, of which the Kohala Center is one. And we're going to talk a little bit more about Slow Money here in a minute, who is also very active. Some of our recent campaigns, just to give you an idea of why some borrowers are going to Kiva. Hawaiian Heritage Hogs, that's a picture of Sam from a recent I forget what it's called, article with Hanaho, from a recent article in Hanaho with Hawaiian Heritage Hogs. She brought in these Mangalista. There's high-end specialty genetic lard pigs, cute little furry pigs. There's about $3,500 per bred sow, and with vet bills and shipping and so on and so forth. Things are going well for her, but she didn't have $7,000 to make that investment and make that change. So she utilized Kiva to do that. Malahoku, small landowner in the Hawaiʻi area. I think he needed a chipper or some piece of equipment that was PTO attachment to his tractor that he already had. Kihei Poultry, small poultry operation, just needed a couple thousand for basically chicken coops. And then Paniolo Pets, which is another pet food company in Hawaii. In the Waimea area. They're a longtime ranching family. There you see Nick and his wife Nikki, and they're converting culled cows basically into this high value pet food product. So the theme here is that these loans have kind of a distinct purpose that's just putting a little bit of wind in the sails of the operation. They have a line of business and they need just a little bit of support to acquire like one thing. $8,000 to $15,000 isn't that much money, but it really solved a problem that these farmers had to get them onto basically the next problem. I'm not going to spend too long talking about Slow Money because I think Mary's going to spend the final portion of our session together really digging into detail. But Slow Money participates in 90% of our Kiva loans as a trustee, and I think Mary will discuss that process. And it's about 60 members who prefer debt, and really the focus is food. And I got this quote here, Mary. He said, "What's the one thing you would want to convey?" And she said, "The key words that we're building community and building long-term supportive relationships around the borrower." And I've included contact information to all these sources of capital because I'm going to send the slide deck to you, Megan, so that way you'll be able to share it out. That's a lovely picture there of Emily with Puna Chicks and her family there down in Puna. Just a quick comment. I'm also a loan officer for Feed the Hunger Fund. They're a CDFI. They will take risks that others won't. You're required to have a letter of declination. So basically, borrowers need to have been turned down from other sources in order to access and be eligible for these loans. Fairly low cost at 4%. Most loans tend to be 5 to 7 years. Loans are in the $5 to $250,000 range. Some of the recent loans that they worked on is they perfected a real estate transaction. So basically, it's a long story, but there was a fee that kind of was like a surprise event in a real estate transaction, and the buyers needed to come up with basically $75,000 quickly in order to be able to pull together their other lenders. Cash flowing and NRCS award. The Farm Service Agency has the the USDA has the Natural Resource Conservation Service does these reimbursement grants. So typically the farmer will need to spend a bunch of money and then get it reimbursed by the USDA. In this instance, I think it was building a greenhouse. So it's kind of a 3-month loan, basically to put in a greenhouse. Debt refinancing, see a lot of like very low credit scores, high cost debt. So many farmers find themselves in PayPal loans, which are Square loans, which is just, I don't know, 30% interest fee. It's so expensive. I just can't even wrap my mind around how expensive it is. And a lot of inflation management recently. Seen a lot of food processors saying, I need to buy like a pallet of glass, or in one instance, somebody needed an entire shipping container of supplies. And they were like, I just got to buy it now before prices go up any further. So that's been one way that small business owners are coping with inflation, which I'm sure all of you have noticed has been moving pretty quickly, sometimes an eye-popping. I have this kvass, I don't know, it's like this fermented drink. I like to buy it. It's this Russian lady, Olga. I was chatting with her this weekend, and I mentioned to her I had one of her gallon jugs, and she's like, yeah, those used to cost me $5. Now they cost me $20. So it's sort of like, wait, how much has it gone up? Like $7, $8 wouldn't surprise me. But anyway, so people are buying like they're just stocking up basically on inventory. Before I get into more commercial sources and government sources of debt, I just wanted to have a comment here about the Farm Service Agency. The FSA is the entry point to the federal government for farmers. And if you're going to get an NRCS award, you need a farm number, and you're going to get that from the NRCS. Robert Ishikawa is the county executive director. If you've not been in contact with this agency, you need to be. If you're filing a Schedule F and you're in commercial ag, get connected with the Farm Service Agency. They have a variety of programs. I'll just pick on one. They're currently actively seeking people to enroll in the Reimbursement Transportation Cost Program, or RTCP. So from Puerto Rico to Alaska to Palau, local agencies are provided a reimbursement. So everything that you purchase, from a bag of fertilizer to a shovel, it carries a premium, and the federal government will reimburse you for a portion of that premium. And one farmer mentioned to me, it was kind of frustrating. He hated all the paperwork. It took him like 2 hours, but he made $800 back. And he's like, gosh, there's not many things I can do as a farmer where I'm making $400 an hour. And, just commenting that if there's a hurricane or landslide or flood or drought, this is the government agency that's going to be cutting a relief check. And, during the pandemic, 40% of farm income came from the federal government in the form of programs. So it's better to get signed up now when you don't need it. So that way, when the time comes, you're ready to kind of plug in. So I have what I like to jokingly call the Farm Loan Starter Pack. These are the commercial lenders who are most active in working capital, but primarily real estate acquisition. And that's the USDA, American Ag Credit, and then private loan broker who specializes in government loan programs, Jason Oklahoma. I'm going to get into a little bit more detail on each of them. So a quick comment on commercial real estate financing 101. All the lenders I've talked to said that basically they're looking for farmers with some experience. In the USDA's case, it's very specifically at least 3 years. American Ag Credit mentioned they see people who have some business management experience do even better than people who just have simple farm experience, but they're looking for some kind of like, you know what you're getting into. A plan with financial projections and the financial capacity to repay it, whether that's either from the farm that you're acquiring or building or from other sources of income, and decent credit, like not good, but decent. And each one of these lenders has kind of different standards, which they'll tolerate here. But this is a theme that comes up a lot. Farm loans are a little different. If you're a homeowner, you know the process of applying for a mortgage. You go to a bank or a mortgage broker, and they try and get you to fit in a variety of different boxes, and a lot of those boxes are driven by who's going to be acquiring the loan. So if you go to a loan broker, most likely your loan is going to be acquired by, the big one is United Wholesale Mortgage, and then they're going to be turning around and selling that to the federal government. You probably heard the terms Fannie or Freddie. So the lenders that I'm going to talk about are frequently trying to fit you into not Fannie Freddie, but like Farmer Mac or a bond program that American Ag Credit has set up. And you don't have to think about those wholesale financing markets. But my point is that a lot of times what people are asking you for isn't because they're nice or not nice or don't like you or do like you. It comes down to, are they going to be able to take you on paper as a mortgage and then have somebody else carry it for the life of that mortgage. So I wanted to introduce Michael Chalk. He is the loan officer with FSA. So I mentioned FSA earlier. That was farm programs. There's also FSA farm loans, kind of two different, I don't know if divisions is the right word, but teams within the FSA. And this is for farm ownership or working capital. And you don't need to be declined by another lender. Like you don't have to bring proof, but you do need to sign a form that attests that you have applied for credit elsewhere and not been able to get it. And the terms are, they have probably some of the best terms for acquiring a farm. They'll pay for closing costs. You don't need a down payment. They can spread the term out to 35 or in some cases 40-year amortization or term, so that can bring the monthly cash flow down. And they're relatively low interest, currently around 4%. The kicker is that they have a cap on how much they can lend you of up to $600,000, which doesn't get you as far in the islands as it might somewhere in the Midwest. And decisioning can take 90 days. And in like this hot real estate market, you're sitting right next to somebody who's got a wheelbarrow full of cash, and then little old you with a loan approval that can take 3 months. It's been tough to compete with some of those other buyers in the market. But I think that's changing. Where I've seen the USDA be really successful is when a farmer is buying their neighbor's property and the neighbor's part of the community and doesn't want to sell to anybody else. It's got kind of okay, take 3 months. Or, there's a farm manager who's acquiring the farm, or there is take another example. But, usually it's sort of little less, I'm trying to say, usually the buyer and the seller there's some situation that's lending itself to patience on behalf of the seller. Climbing that ladder now, right? Coming more towards commercial credit here. Want to mention Jason Oklahoma, refer a lot of people to him. Now we're just talking real estate financing here. He works very closely with American Farm Mortgage and Financial Services. They're a private bank in the U.S. continent, and they can do up to 1.8 million, and they do piggyback. So they'll take that $600,000 from the USDA, and they can bring, let's say it's the real estate transaction I mentioned earlier that had that surprise fee in it. The farm was, let's just say, 800,000. So the USDA came in with 600 at a lower interest rate for 40 years, came from the USDA, but then there was a remaining 200 that they needed to get from somewhere. So they went, not to Jason, but in this case, Jason could work with them to secure another 200,000 through American Farm. Interest rates a little bit higher, 6 to 7%, a little bit more market rate, and then 30-year max, which is pretty typical, pretty standard to have that 30-year term. And finally, I'm going to land on the number one lender to ag in the islands, which is American Ag Credit. They're part of Farm Credit Services system, which was created about 100 years ago. About a third of the lending in rural America comes from Farm Credit Services. It's not a government agency, but it's a private commercial lender that's borrower owned. So it's kind of like a credit union. It's a cooperative. And I really stress this point to say, again, these people know ag, they understand agriculture, they can lend on kind of the farm plan, right? They understand how agriculture works. They know that there's these cycles to it. And they for all those dynamics that I discussed earlier that have kind of like left traditional banks to sort of abandon agriculture, this is like really what American Ag Credit does. They can do up to 100 million. They do need 30% down. That can come from a USDA loan if you qualify. And then again, interest rates a little higher at 6 to 8%. As a co-op, they pay a dividend. So a lot of people are shy away from that 8% interest rate, but just commenting that borrowers receive a 1% dividend annually. So their effective interest rate's a little lower than what they're actually paying month to month. And you're going to need a good credit score, 700 and above. When I was kind of going over, that's Linus there with Greenwell Farms. And I was asking him, so where do you do most of your lending? He sent me this little snapshot of their portfolio as of April. So they got about 145 million out to the state, with most of it in tree fruit, so coffee, cacao, and then quite a bit into beef, and then just a little bit into nursery and vegetable and melon. So I've kind of gone over a lot of details really quickly, but if there's any points that I want you to take away, it's that debt financing is the heart of the farm purchase or acquisition transaction, and it's also the heart of the operation. Acquiring the equipment, cash flowing the inventory and the accounts receivable and the accounts payable. The banker is the gas station that provides the fuel that keeps the engine of the farm running. And that there's really a range of options, and that often you'll see kind of a capital stack within a farm. You got a credit card for work, day-to-day stuff. They got a farm loan for the equipment. They're working with a group like Mary to take on a special project, and then they've got a mortgage to pay for the real estate that everything is sitting on. And that all these lenders have different boxes. And so, people often view money like am I worthy? Am I not worthy? Am I going to get it? Am I not going to get it? And what I always tell people is like, form that relationship with the lender, shop around, find out what those boxes are. And, just because one person might say no and another person might say, yeah, what your bank or credit union might not want to get near might be like bullseye for one of those other lenders that I walked through. And so, what I tell folks is, if you give me a call. If you're thinking you want to raise money, you don't really know what your options are, you're kind of befuddled by all the details that I just plowed through, and you're kind of stuck, or you want to kind of go over your financial plan, give me a call, and I'll just kind of go over the options as I see them. That's sort of my job. And Megan shared with me a list of your questions. They were great. I really appreciated them. They kind of really helped inform sort of my talking points. And I'm seeing you there, Ryan, and you sent me an email and you're like, don't forget to talk about Steward. I'm sorry I didn't have a slide dedicated to you. I just kind of went for the ones that I work with the most, but I did want to point out that there's a lot of options in here that I didn't mention, such as Steward Capital. They're like they're an online, kind of like Kiva. In fact, you should probably talk about it on your own. You do a better job than I could. They're a private lender that packages a bunch of they're not actually the lender. They package a crowd lending solution for specifically farmers, and they work all over the US, and I've seen them do like very large loans and like very teeny loans, credit challenge loans, and loans that are probably to very well qualified borrowers. But just pointing out that that's another example of one of these options where, if all these other, X didn't work, maybe Y will. And where I tell people to be cautious is, like I say, there are some predatory actors out there. Like, I see borrowers all the time with Square loans and PayPal loans, and it just, to be aware of the expenses that are associated with loans. What I like about the options that I presented with you, and I would put Stuart on that, is that these are all term loans with a set APR from lenders who get agriculture and understand that there might be a down cycle or a drought, or be willing to do a workout plan if issues arise. The cynical joke about bankers is that they'll lend you an umbrella when it's sunny out, and the minute it starts raining, they're going to knock on your door and demand that you give the umbrella back. And I think all those folks that we've been just talking about do not fit that description. So I'm kind of rambling a little bit, and Megan and Ani mentioned that if there was anything that I didn't address in the questions that they might be willing to ask me. But does anybody who's currently on the call right now have a question? Anybody? So I'm reviewing some of these questions that people shared, and which was in the surveys that all of you took, and I think even some people who are probably going to watch this recording. One of the things that came up for me a lot was, are all these sources private, or is all this stuff government, or hey, I need to purchase some equipment, but I also need to do some operations. And again, kind of reiterating that there's for different uses of capital, there's different sources of capital, and that part of your job as a business owner, a farm operator, is to be able to kind of connect those dots between sources and uses. Nellie, Taj, Daphne, Ryan, Ani.
Eric, I'll ask you one. I think the most common thing that people come to our organization looking for funding for would be land and tractors. Maybe you can talk more specifically to those examples, where you might refer them, or what they would really need to show to be able to acquire that level of funding.
Perfect example. So I see quite a few farmers have what's called dealer financing. So a lot of times this is 0% loans for a new piece of equipment that they've qualified for based on their income. And a lot of those lenders are what I would call like collateral based, like they're not even really worried about your income. I got one small farmer who $50,000 Kubota, and he missed, I don't know, 1 or 2 payments, and it's like, I'm the collection agency. We're getting ready to repossess. You want to make payments or whatever? We don't care, but we're going to come get that Kubota back, and they're just going to put it right out on the showroom floor, So I think dealer financing actually can be a great option because you can get into a piece of equipment, but the dealer just wants to move that equipment. A lot of times they have you don't know this, but a lot of times dealers have like a loan on the equipment that's just sitting there on the lot. If they can put that in your parking lot and you can start making payments on it, that is great. So there's nothing wrong with dealer financing, but just make sure you know what you're getting into. I have seen some instances where dealers have referred equipment buyers to what I would say kind of some third party. I got one farmer that's working with, like, they can't even get a statement of how much money they own. They can't even find out who these people are. There's just some like private lender that's in the middle of nowhere, like Chicago, that specializes in moving this commercial equipment. So I think Feed the Hunger Fund, Slow Money, Steward, USDA, all those people would be enthusiastic about lending on equipment. Frequently, when I see these equipment loans come to me, they're trouble. It's like the guy who's like 2 months behind on his tractor and he's getting ready to get it repossessed, and he just he's working with somebody who's not forgiving. And I don't mean in a nasty way, like not in a predatory way, just simply like they don't really care. Like you've got their asset, and if you're not good, they're just going to come get it and resell it. Very, very different than working with a mortgage lender. So I feel like I kind of maybe dug in a little bit and got a little bit into the weeds there on the different mortgage lenders. But if somebody wants to buy a farm, like they need to start talking to a mortgage lender like immediately, because it's kind of fairly similar to buying a house in that you're not going to get like a letter of pre-approval, but you'll send them tax returns, and within 20 minutes, they're probably going to be able to tell you what they can do. And, if you're eyeing a farm, and let's say, that farm is, if you're buying a farm, like it's an operating farm already, you should be able to get financial statements, tax returns, profit and loss, something that demonstrates the revenue that's being generated off that farm. And a lot of times, some of those farm lenders are going to be able to lend you the money just based on that. They're going to like, oh, you've got a coffee farm and it's 10 acres and you're making $10,000 an acre. Yeah, that sounds right. That's what we see coffee farms doing. Is this answering your question, Megan? But I guess what I'm trying to stress is that they're two very different types of loans. And in the case of American Ag Credit and the USDA, they could probably have a loan for both of those types, but again, it's matching the sources to the uses.
Yep, that's a perfect answer. Thanks.
Okay. Okay, here's one thing I will say about real estate financing or just financing in general. I didn't really touch on this. Typically, when I start talking to a farmer, like the very next thing they'll tell me is like, oh, but I do a bunch of cash sales. And I'm like, great. I'm trying to figure out if you're honest, and you're telling me you're evading taxes and you're engaging in, financial fraud. And it's like super, super, super common. So it's kind of par for the course, but for God's sakes, don't tell your lender that. And, most lenders know that when they work with farmers, that there's like a heavy cash component, and that a lot of times the farm is supporting part of their personal life. I mean, I got a farmer who lives in his process, multiple farmers actually live in their processing facilities. And then, the farm business LLC carries the personal vehicles. So, I mean, they're farm vehicles. You look at it, like, yep, that's a farm truck, but that also brings them to the bar and the grocery store and around the island surfing. So I guess what am I trying to say is that if you want to get a loan, the best thing you can do is to fulfill the basic obligations of a business owner, and that is accurately track where your money is coming in and how it's going out. And if you show income on your tax, when you file your tax returns, you're signing an attestation to the federal government, the highest authority of the land, saying this is true and accurate. So, when I see a tax return, I just feel like I look at that like that's what happened, and it gets very difficult to take activity that isn't showing up on the tax return and add it back into a loan analysis. So just show your income if you want to get a loan, basically, is what I'm trying to say.
That's great. Any other questions?
Long answer to a short question, Megan.
No, that was great. Anyone else have any other questions, or should move over to Mary and talk
I have a question.
Okay, great. Thanks, Mel.
It's just to piggyback off of what you were just previously saying on cash sales. What would be the best method to, as a farmer, for a banker or a lender to document cash sales, whether it be, I guess, paper receipts, emailed invoices, bank statements of deposits? What would be the best method for farmers?
Fair question. I'm going to show you what I think is like the most basic thing you can do here. I'm going to share my screen in a second here. But I would just say keep some sort of log. And here, I'm bringing up a document here. Give me a second. see if this is showing up here. You guys seeing a spreadsheet here? So, I mean, this is just like, you know, I would just put in like, you know, September 13th, 40 bucks. Egg sales, you know, or such and such farmer's market. You know, it's not that you can't have cash sales, and you know, we're recording. I don't know if I should say this. I mean, reiterating, it's pretty typical that there's, you know, like the farmer goes to the farmer's market, he makes $300 in cash, and then on the way home, he just like puts it in his gas tank and doesn't even worry about accounting for it. You know, if you know, because you're going to owe GE taxes, right? General excise tax of whatever that is, 4% or something, and then you're going to potentially owe income tax on it. Most farmers who aren't making very much money, they're not. And if you've got a kid, you can probably get the earned income tax credit. So I don't know. I mean, if you're, you know, the farmer I'm thinking of, you know, he's doing $700,000 a year in sales, and then, you know, probably running 50 to 100,000 in cash kind of off the books. You know, that would not be uncommon. If you're all cash and you want to like really be like super legitimate, you just track it like that, and you keep that, you know, you keep that recorded. And you know, I think what a loan officer is going to do is they're going to look at your tax returns, like multiple years of tax returns, and then they're also going to look at a year-to-date profit and loss statement where you kind of recorded your income and your expenses, and then they're also going to look at bank statements. So, you know, if you want to be like totally legitimate with those cash transactions, which officially, technically you should, then you're going to log it, and then it's going to show up in your bank account, and then you're going to pay taxes on it in your quarterly GET filings, and then annually. And you know, I'll just mention this now, Megan and Nellie, that the Kohala Center has a contract CPA kind of in our bench. We have a grant from AgriLogic, which is a crop insurance company. And basically, if there's a farmer who's like, oh, I don't know how to set up my financial management systems, help. She can come in as a consultant and advise you and look at what's going on, get you set up in QuickBooks, set up a charter of account, to spend a few hours with you, kind of cleaning up whatever issue you're dealing with and giving you some one-on-one advising. Just say, reach out to me, and she can really hold your hand through that on a more personalized basis, if what I just shared with you doesn't just answer all your questions.
Thank you so much, Eric. It did, and I will go ahead and contact her as well. Thank you so much.
Absolutely. And now I fear I'm cutting into Mary's time, and I've such respect for what she has built and what she has done and the work that we have done together. So I think I'm just going to go ahead and make sure I don't step on her portion any longer. Uh-oh, you're muted, Mary.
Sorry about that. Thank you, Eric. I have a request first. I'd like to meet everybody on the call that I haven't already met. I know Eric and Megan. Annie, I'm guessing that you are there with Megan working, but if you could all just give a quick intro of yourselves and what brings you here today, including you, Annie.
Hi.
Woo!
I'm supposed to.
Max Headroom. Okay, you're muted now. We'll move on to somebody else. Daphne? I think you're muted, Daphne. There you go.
Okay, I'm Daphne, and we started our farm on Kauai in Moloa, and we started with coffee, and we diversified a little, and we added cacao, and we also grow ulu, citrus. We have 15 acres, and I'm actually perhaps on the other end of the spectrum, because I'm thinking of actually selling our farm. And so I just kind of wanted to see, because we own it outright. So I'm just kind of wanted to see if I should spend money to have it ready to pass it on to someone else to continue. I'm hoping somebody will continue.
Are you thinking about retirement years?
Well, yeah, I've passed retirement already, but it doesn't-
Retirement is a state of mind.
That's true. That
And
is true.
personally, I don't think it's all it's cracked up to be.
Yeah, it's true. But I think we've had the farm long enough. And since my husband passed away, it's even more so important that I pass it on. My daughter's not interested in continuing the farm. So I'm a little different. I'm just trying to think if should I spend money to, get it ready to maybe sell it or lease it out to someone. I'm
And
not.
that's why you're interested in lending and
Yeah,
borrowing in your
because
case.
I don't have a loan at all. So I'm just wondering if I should be taking out a loan to trying to work. Get
Great.
it.
Well,
Mhm.
thank you for sharing that.
Yeah, sure.
Taj, can we see what you look like and hear from you?
Aloha, this is actually not Taj. I'm under her account apparently. But my name is Kim, and it's a pleasure to meet you all. And I appreciate the work that you're doing and holding this this specific webinar today. So mahalo for this. And apologies, you can't see me. My camera is sort of permanently blocked here. And yes, I'm also, I actually live up near Makaleha. And then I also support the work that's being done on a farm in Moloa'a. And we're looking into, there's already some orchards and such here, and then just looking out to plant, plants that will both sustain, our ability to live while also nourishing us and really allowing us to thrive. So, with sustenance things, and then also, medicines and superfoods and things like this to both support the island and beyond. So really looking to, expand what we have going here, and then really, do what we want to do. And so, always looking for funding resources for plants and for also, machinery and such, and work, paying people to come and help do this with us. And I believe you're muted, so. Mary,
Thank you. Yep, thanks.
Yes.
How about you, Nayli? Thank you, Todd. Thank you, Kim. Nayli?
Oh, hello. My name is Nellie. I am a student in the Go Farm program currently. I'm also a real estate agent with Keller Williams Honolulu. I'm currently looking for land to farm. At this moment, I'm also considering the next phase of the Go Farm training program, which would be the Ag Incubator series, which is more independent and just a smaller parcel of land. My intention with the Go Farm training program is to become a farmer and take it to a commercial level. I have a few years of experience living on 2 operating farms, one in Moloa'a and one in Kilauea. I've worked at the farmers market. I've worked in a restaurant. I know the demands of the restaurant side of food as well as the farmer side of food production. I'm currently learning about production plans and succession planting, and also the weed and pesticide options and alternatives. I have lots of plans in this sector, and so I'm just here to learn more about what options I have in funding and the possibilities.
Wonderful. Who's your coach at Go Farm?
Our coach is Jinwa Lau.
Oh, I haven't met Chinua. Yeah, that's such a great program. Well, thank you. And that leaves Ryan.
Sure. Hi, aloha, everyone. I'm Ryan Gallagher. As Eric mentioned, I'm a steward, and we're one of these alternative private commercial lenders that he mentioned. I'm here primarily just to see if our slide made it into his deck. Just kidding, Eric. But no, my family actually recently relocated from Portland, Oregon to Kauai back in June. So I'm here full time in Lihue. And, we work nationally with human scale regenerative farmers and ranchers and food producers all across the United States. But because I am here now in Hawaii, I definitely want to do whatever I can to bring as much capital possible to the islands. So just trying to immerse myself in kind of the local agricultural community, participating in different hui's and going to different conferences. And so when Megan reached out and invited me to not just, or I registered for the event, but said, hey, come listen in, and then maybe there'll be an opportunity to talk a little bit about Steward at some point. I thought it sounded great. So yeah, thanks for having me on. I'm planning to send out some information and kind of draft off of what Eric's introduction, but provide a little bit more about Steward for those that are interested. But yeah, I'm not a farmer, unfortunately, and not really a banker either. I'm a marketer, so I'm on the communication side of things, but so I'm looking to tell great stories and help use those stories to bring capital to Hawaiian farmers.
What was your role with Steward before you came to Hawaii? How close are you to the founding team?
Well, I've been with Steward for a year and a half or so, so I'm not part of the founding team. I joined on as, I think, employee number 7 or 8 as their marketing director. So I've learned a lot in time. I have been kind of a lifelong marketer working for mission-driven organizations, and was sort of on the fringes of agriculture, working around with conservation organizations and working lands and conservation easements. But it's been a pretty incredible kind of immersion into regenerative agriculture these past couple of years, as well as this kind of whole world of crowdfunding and creative uses of capital. So I'm not a career finance guy, but definitely have learned a lot to be able to kind of tell that story and help communicate that with the borrowers that we work with as well, help them understand and make what we do understandable and accessible.
Great, thank you. Does Steward have, I'm putting you on stage now, but does Steward have typical lending terms? Could you share that with us?
Sure. So yeah, we're a private commercial lender. We're a little bit different than Kiva, but sort of a similar concept in terms of using kind of crowd lending as our mechanism to raise funds. But we raise those funds for Steward, and then Steward acts as the private lender for the borrower. So our general terms here, I'll pull them up here on my little screen just to make sure here. They vary. I mean, we don't have a one-size-fits-all loan by any means. That's partly why we do what we do, is that we're quite flexible and adaptable to kind of what the specific business situation is. But typically our loan terms are a shorter kind of 48 to 72 month term loan. They typically have anywhere between a 3 to 12 month deferment period. Our loans average between about 6 to 8% interest rate. We've done the low as 5 and as much as 10 in the earlier days, but 6 to 8% is kind of our sweet spot. Just depends on what it's secured on. All of our loans are secured loans, so there's some sort of business asset, and they're business loans, I should say. So things like credit score don't really apply. We are a commercial lender looking for business entities, LLCs, Incs, partnerships, nonprofits. We can do a range of different types of financing, whether it be fully amortized or interest only. We do some non-revolving credit. We have a range of different sort of lending tools that we can use. And then we typically have a 3% origination fee. So we don't take a spread on the interest rate, that 6 to 8%. What makes our model unique is that we have all these individual participating lenders that send money to Steward. We're able to pool those funds and aggregate them as a business loan. And then every time that loan is repaid to Steward, it's immediately repaid to all the individual lenders at the same term and same interest rate. So if a borrower is on a 60-month loan at 6%, all the participating lenders, 200, 300, 400 people, will be getting repaid at that same 60 months at 6%.
Thank you. Thanks. Yeah. Okay, I hope others were also interested in that information. I really asked those questions for myself.
Thanks, Mary. I really butchered trying to present. I'm so glad Ryan got a chance to discuss his model, and he didn't have to survive off.
Well, I'm
plate,
glad
so
you
thank
did too, because I was going to say something about offshore crowd lending that probably wasn't in his favor, but no, I'm not going to say it.
What I'll say is, Mary, I'm happy to connect with you one-on-one and answer any questions. And then for anyone on this call as well, I'll put my email in the chat. I'm here locally. I can grab coffee. We can go get a aloha and a drink and just chat. So I'm here local and accessible.
Wonderful. Thank you. Okay, so if we could do a little show of hands, how many of you have heard of slow food before you heard of slow money? Nellie, Kim, Daphne, never heard of it?
No,
Okay.
No, I haven't.
Well, I won't go into detail on slow food. I'll just say that it's a movement that started, I'm going to say about 20 years ago now, by a chef in Italy when they were opening the first McDonald's in Italy. And he and other chefs threw up their hands in horror and said, oh my God, this is going to ruin our food culture. And they started this movement to perpetuate what Europeans have always done, cook from scratch from locally produced foods that and eat together and cook together and use sustainable methods to grow the foods. And then later on, I don't know if it was 5 or 10 years later, slow money came along, which was probably the brainchild of a guy named Woody Tash, who was a Wall Street veteran. Woody gets all the credit, but I know there were other people that were part of that too. And he had his aha moment and said, everybody is looking for fast money. Let's get it, let's get rich quick, basically. And he said, to achieve the things that we need to achieve to have slow food and to have a better world and to fix some of the many problems that we have on our planet, climate change and so forth, we need to come up with something characterized by slow money, patient capital, capital that is used for the betterment of our communities. So thus slow money was born. And in Colorado, Boulder, Colorado is the home of the Slow Money Institute. From that, there came 17 slow money networks. Hawaii is number 17. And I started it here somewhere between 5 and 7 years ago. If Eric says the Food Funder thing started 7 years ago, that's probably about the same time that I started Slow Money. And the reason I started it is because I learned about slow money and it fulfilled a personal need that I had to help farmers with capital. I had just inherited a little money and I grew up during the hippie times where we were back to the earth and grow your own food and back to nature. And I became an avid gardener and I started thinking about farming. I was actually born on a farm. For some reason, I always wanted to be a farmer. And that's when I started to learn about all the challenges that face agriculture today and about GMOs, about monoculture, about factory farming, all the things that have made agriculture more of a harmful endeavor than a helpful one. And so I wanted to know how I could help farmers. And I thought, well, with farmers having trouble getting money to start farming, maybe that's what I can do with this inheritance of mine. So I ended up looking for someone else to start Slow Money. And I was at that for 2 years. I didn't find anybody. And I finally says, okay, I guess I'm just going to have to do it myself. So here I am. I had no idea it would take this many years to get to the point that I'm at with Slow Money. But as of today, I'm very happy to share with you that we have transacted over $400,000 in small loans. Most of those loans are between $2,000 and $5,000 from each lender. The borrowers have borrowed anywhere from $700 to $50,000. On a $50,000 loan, it was actually a combination of slow money and Kiva, where we paired those two mechanisms together to meet the $50,000 mark. And more than 60 people in Hawaii have made a slow money loan at some point, have made at least one slow money loan. Several of them have made several loans. And I feel like we really are starting to become a community now, which was the goal all along, because that's what slow money is about. It's not about transacting dollars. You know, here, I write you a check, you're going to pay me starting on this date, this many times, and then we're done. That's not slow money. So it's really about a relationship between people and their food, and people and the farmers that feed them, and between the borrower and the lender. So the eaters who need the farmers are the lenders, and the borrowers are the feeders. And whereas a conventional loan, they look at your tax returns and they look at your credit score, slow money looks at you. You know, who are you? How determined are you to make this work? How prepared are you to make it work? And you would call it a character loan. And then there's a certain amount of just finding the right synergies. You know, will you connect with these people who also want to make food more available in Hawaii? So, and then terms generally, in terms of the length of time of a loan, the longest we've done was 4 years, and the shortest is 6 months, actually 4 months. The 4-month loans, oh, you know what? Let me share my screen here instead of just talking to you. Do you see my screen? Whoa, what happened? Can someone say something?
Yeah, we can see your screen, but we can see your entire
Okay,
screen.
the silence scared me. I thought I'd lost you. And you can see my screen.
Well, we can see your whole desktop.
Okay, here we go. There we go. Okay, so the terms, an example of a 4 to 6 month loan. We've had 2 of these now. One was Hilo Food Hub, where a young man by the name of Zach Larson had a business called Hawaii Brine, where he was making fermented foods. And he found it to be incredibly challenging to find an affordable kitchen space. He finally decided that he needed to create a kitchen space, both for himself and to foster other people who were trying to do value-added propositions. And he rented a warehouse and built out a couple of bays in it. And he got 2 grants from Hawaii Energy, who was giving $25,000 grants at the time for businesses to put in energy efficient equipment. And he was able to get quite a lot of equipment for his kitchen using those grant monies. But like some of the other grants that are out there, like NRCS, who gives grants for high tunnels and other things, water conservation plans, the way those grants work is the farmer has to go out and purchase the equipment and install it. And then Hawaii Energy or NRCS, whoever's involved, comes and inspects it, make sure it meets their specifications, and then they release the grant funds. So the farmer's got to come up with all that money up front before they can do this. And so we did that with Hilo Food Hub to equip his kitchen, and we also did it with Thrive Farm here on Oahu's North Shore. Thrive, he just finished paying back his loan a month or two ago. And in this picture here is the high tunnel that he put up. And he was harvesting from it within 3 weeks of finishing putting it up. And he is expecting it to boost his farm income about 20% in the first year. So those are really easy grants to get lenders for, because they know where the money is going to come from to pay it back, and they know when, and they're fairly short term. So they're really a nice introduction for people who are trying out the slow money lending for the first time. Another one of our lenders was was Ludovico Farms, who is doing pasture raised chickens also on the North Shore of Oahu. And we were able to introduce Ludovico to some market outlets when he found himself losing his clientele at the onset of COVID. I was able to introduce him to Kualoa Ranch's market, and he was able to transition to selling over there right away. Okay, so another one of our borrowers in the very early stage was the Ulu Co-op. When we made loans to the Ulu Co-op, they were renting a couple of freezers and spending over $2,000 a month on it. So with a slow money loan, they were able to buy their freezers, and their monthly payments were less than what they were spending on rent. And that was we had, I think, 5 people on that loan. It was one of the first half dozen loans that we'd done. And a short time later, they had another need. I'm not remembering exactly what it was. And the same lenders came back and made that loan as well, even while the first one was still outstanding. And then about a year later, they came back and they had an opportunity to begin getting their Ulu on the DOE's menus in schools. And they needed to build up their inventory so they'd be ready when it started. And we made a $25,000 loan to them in the course of a week, and needed no further acquaintance. Again, several of the same lenders made that loan, as well as some other newer lenders. And now, I think it was just last year, they were raising $1.2 million to grow the Ulu Co-op to the next level. And 2 of our lenders became equity investors in the co-op. So that's a nice story of how, getting somebody started at the very small stage when they're unappealing to any lender, where people who get to meet, in this case, Donna Shapiro, and get to know her and have confidence in her and a strong desire to see Ulu become available throughout our islands, were able to take a relatively small risk with their $2,000 to $5,000 not a small risk, but risk a small amount of money, relatively speaking. And then watch it grow to what it is today. It's been really amazing. So I'll give you more examples in a bit, but just a little bit about the process of how a slow money loan works. People come to us mostly through word of mouth, or we've had some that have been Kiva borrowers for which Slow Money has endorsed their Kiva loan as a trustee. Slow Money is a trustee with Kiva, and we also have a Slow Money lending team on Kiva. So our lending team is now about 120 people, mostly people who live here in Hawaii. We try to keep it either to residents or people that have a close tie to Hawaii. And whenever we endorse a borrower and they come to us almost exclusively through Eric at the Kohala Center, which we really appreciate. Thank you again, Eric. Whenever we endorse them, we will send their loan out to our networks, both on Facebook and to all of the members of the Kiva lending team. And as Eric covered, Kiva loans are 0 interest. And generally they're 3 years and a 6-month grace period with some variation on that theme. So in the case of the Ulu Co-op, for example, she took a Kiva loan out first, and then we added on to that with a slow money loan, and then another slow money loan and another slow money loan. And so some of our borrowers do come to us that way. Others hear about it through friends. Others might hear about it at the odd speaking engagement. We are part of the Ag Network on all the islands, and we do make loans on all the islands. We've done 2 loans on Kauai. Kauai's a little bit behind in terms of the volume. I'd love to have more borrowers from Kauai. So in terms of the interest, most of our loans where there is an interest payment, it's usually 3.5%. But this is something that's always negotiable. We just try to get the agreement of all of the lenders involved with any particular borrower. And I don't think I've explained that structure very well. So if you need to borrow, for example, $30,000, I will look with your help for maybe 15 people at $2,000 each, or 5 people at $6,000 each. It all depends. A lot of it depends on you and how easy it is for people to understand your project and see the value of it, and how much energy you want to put into it, whether you already have an established network that you can reach out to and invite them to participate. And we do it both ways, where I think the loans where the borrower has brought the most participants to it have been one that I'm currently closing, which is Lava Paws, a raw dog food producer on the Big Island. She is so loved by her customers that the first 6 lenders were all her customers, and they signed up first, and then a couple more came on board, and then I filled in the rest with other slow money borrowers. The Ulu Co-op was another one that brought many of their own lenders to the table. And then other loans, I've brought all the lenders to the table. So it really just depends what you're doing and whether you have a network and what that looks like. And then the interest rate, as I said, hovers usually around 3.5%, but we get creative with that too. So this Thrive Farm here that you're looking at, for example, about half of his lenders decided to take their interest payments in vegetables from the farm. So they got four 4 weeks of CSAs instead of taking their interest, which would have been maybe a couple $100 over the life of the loan. And then going back to Lava Paws again, and her popularity with her customers, she almost all of her customers, plus a few of the new people who are her lenders who became new customers, almost all of them wanted to take not just the interest, but the full payment of their loan in product. And Eric, by the way, Eric, can I share that? Eric is one of her lenders. He was a customer already, and he too says he won't have any problem working through all that dog food long before the term of the loan is over. So, that's a real perk for the borrower, because she still makes some profit on that food that she's paying out as interest. And then her lenders, even while she makes a profit, they're getting a 10% discount from the product that they would be buying anyway. So I think that kind of shows a little bit about the interaction between borrower and lender. And I'd like to spend a little bit of time talking about that, because a slow money loan is predicated on personal relationships. And we will not allow any lender to lend to a borrower if they haven't met them. So our borrowers and lenders all meet. Whenever possible, that's face-to-face in the flesh. If that's not possible, then it will at least be on Zoom, which is frequently what happens if they're on different islands. Or sometimes even on the Big Island, if they're on opposite sides of the island, they have trouble getting together. They eventually get together face to face, probably after the loan's been consummated, but we do not want to run afoul of Securities and Exchange Commission laws. So these loans are considered to be between friends and family. So our borrowers and lenders need to make friends before there can be a loan taking place. Let's see, what haven't I covered? Some of the extra benefits. I think, I've just given you one example of benefits to both borrower and lender when product changes hands at a discount to the lender and small profit to the borrower. But there's other benefits too. All of our loans get posted on our Facebook page, and they go out in our newsletter at least once, if not twice, and ultimately a third time once it's paid off. And that goes to about 1,000 people. And then my own networks include some distributors or small markets. For example, Kokua Market in Honolulu, the Co-op, Hawaiʻi Alliance, Hawaii Food Alliance. I haven't introduced anybody to them for the purpose of distribution, but Chad Buck, who's with them, keeps an eye on what we're doing, and he has connected with one of our borrowers and generously offered some help with shipping because he's got product going back and forth between here and the mainland all the time. Also, we've introduced borrowers to FarmLink Hawaii on Oahu, an online grocery farm-to-door distributor. And Megan, would you like to chime in here?
Yeah, definitely. I think it's funny. That's how we found out about Lava Paws. We started carrying their products. We read about them in a Slow Money email newsletter. And so we're a part of the Food Hub Hui, which is FarmLink, and there's actually 14 of us food hubs across the entire state, and we'll share information about products with each other and things like that. What's doing well, what's selling good. And so it kind of hopefully opened up this whole new network to her just from being in your newsletter. And I thought that was really cool because we're always paying attention to who's in your newsletter. If I see a farm on Kauai, I'll try to pitch in, if especially or if I see them on Kiva, we'll try to pitch in at a personal level. 'Cause I know how hard it is, but you know, just getting in your communications, I feel like there's an awesome network there, and you don't know what other kinds of benefits you might get along the way outside of getting your just your loan too.
Thanks, Megan. Yeah, there's always little pleasant surprises coming up. So, yeah, we have some informal marketing, but maybe the most important part of that is not our Facebook or our newsletter, but it's the lenders themselves. If, for example, you sell at a farmer's market, and the lender attends that farmer's market, we fully expect they're gonna be walking around with a friend doing their shopping and drag them over to your booth and say, hey, here, you got to check this out. I made a loan to them and you got to buy from them and so forth. And I know that happens. And I think that that's a very, that's a very cultural thing in Hawaii. You know, we are, compared to other cities, a small community, lots of everybody knows everybody and 6 degrees of separation. And that kind of endorsement by your lenders, I think, is very helpful to your business over the years. Our borrowers tend to be newer businesses. Thrive here that I have in front of you again, they took out a slow money loan when Jennifer and Jason, when Jennifer was still in the Go Farm program. That's when they took out their first loan, and that was on Kiva actually. And then they took out another loan last year for this. Since they took out their first loan, they've had 2 children. And today they are under contract to buy their own land in Wailua with help from, I can't remember if it's FSA, but it's some USDA program. So can't tell you how happy it makes me to see this family and their business growing and thriving. In fact, it's called Thrive Family Farm. So that's been very rewarding. So the borrowers tend to be either startup or very early stage, and the loans relative to what lenders are accustomed to working with tend to be very small. $50,000 is generally a small loan for any kind of conventional lender. And so far, that's mostly been our maximum, although there has been one loan of over $100,000. And that can happen from time to time under the right circumstance. But one of the things that's so nice about these loans from the lender's perspective is that by keeping it small, you know, if something unforeseen happens, if things go awry, if the borrower's given an extension and another extension and another extension and then just can't do it, nobody's gonna lose their retirement or miss a meal because of it, and that's important. So the right kind of borrower for slow money is someone who embraces the opportunity to make some new friends and to add people to their community, their business's community, and their personal community. We hope that a borrower won't just ignore their lenders after the loans have been made, that they'll update them once in a while, and that if they come across any challenges, that, you know, they'll share that with their lenders. And let's see. I don't know. I think I would sum it up with our fundraising is really friend making. And I, by the way, my career before retiring and doing this was nonprofit fundraising. So it just felt like a natural for me to step into a role where I could find other like-minded people who cared about the food system and the farmers in the same way that I do, and present them with an opportunity to help. And I'll open it up to questions. Gosh, what a quiet bunch.
I'll just comment, Mary, what really struck me is like we've done a little crowdfunding hooey here on accident, like we're Ryan and you and Kiva. And what also struck me is that we have kind of, micro, medium to large, right? I was kind of looking over Stewart's projects, and I didn't realize just how much real estate they're doing. Quite like 1.4 million real estate, acquisitions. It's kind of a scale that's orders of magnitude bigger than Slow Money. And I think Slow Money's orders of magnitude is bigger than what Kiva's doing. And I just almost celebrating how technology enables us to raise money from our friends and family and the broader community. When you reach out to me for lava paws, this is what I tell people. There's kind of two reactions that people are going to have when you ask them for money. One is like, wow, I have money. I need a place to put it. Yes, please. Thank you. This is great. Then send me some more information. The other way people react is, you know what? I don't have money, but wow, thank you for thinking of me like I'm an investor, So there's kind of, what I hear over and over again from the folks that we've worked with, particularly with Slow Money, Mary, is that community that you're speaking to, that network, that they're just like, it's priceless. Like the money was valuable because it helped me tackle this thing, but it opened me up to this whole other world that I didn't even know existed. And I met people who I never would have met had Mary not introduced us. And now there's been this impact that I couldn't even anticipate it, that's flowing out of this community.
Well, I have to say, thank you, Eric. I have to say that I never refer to the lenders as investors. I think if they heard me call them an investor, they would turn around and run the other way. Because these people, some of them are into the stock market. Most of them just want to help build food sustainability and rebuild the soil and help their own community. I'll open it up for questions again, but since there was a silence, I'm going to just do a little addendum here. On this page, I've got Ola Brew. I don't know how many of you are familiar with Ola Brew. It's on the Big Island, and they're less than 5 years old. I think they're between 3 and 4 years old now. When I first met them, they were buying, I think it was 300,000 pounds of agricultural products, all from the Big Island for their brewing. And they were in a Whole Foods. They got into a Whole Foods store here soon after that. They were planning to go into Whole Foods on the West Coast. I think they did, probably in California, and then who knows from there. And I think their path has changed, and they have a tap room in Kona. They recently opened, this past year, they opened a second tap room in Hilo. They've become a much bigger buyer of local ag products. They bought a big juicer so that they could start taking seconds, the oranges that have fallen on the ground already, which has created a new income stream for a lot of farmers. The one that I spoke to had citrus, and he's the one that was asking them to take that path. And for him, it's made the difference of moving his farm out of the red and into the black. So I look at them not so much as a brewery, as an agricultural company. And they have recently bought a $5 million property in Hilo, which is going to become a combined brewery and restaurant. But again, and I actually found them on a crowdfunding site called WeFunder. They had a different name. They were called Hawaiʻi Cider. And they have done crowdfunding, I think 2 more times since then. But this is one that I and another slow money lender invested in. When the Ulu Co-op did their big fundraise last year, I and 2 other slow money investors invested in them. And now FarmLink Hawaii is raising $3 million. And we've got a couple of slow money lenders investing in them. And a couple years ago, it was Ma'o Farm. So we've had Hawaiian Ola was the first. And then we had Ma'o Farm. And then we had the Ulu Co-op. And now we have FarmLink Hawaii. And all of these businesses have taken quite a bit of time to get to where they are today. I don't know if any of you are headed down a road like theirs of becoming a much bigger enterprise, but whether you are or not, you know, somebody like Ola Brew or the Ulu Co-op or FarmLink Hawaii could be a buyer of your produce if you're a farmer. In fact, FarmLink Hawaii stands to make a huge impact on our local farmers. They buy from all islands. So what I'm getting at here is Eric referred to a ladder earlier in his talk, and he had the bottom rung as equity and the next one is microloans. I probably would reverse that and start with microloans, which is what we're doing with Slow Money and with Kiva. And as those lenders make multiple loans and really get a sense of success and learn more about the environment that we're operating in, some of them will go on to support the Ola Brews and the Ulu Co-ops and the FarmLink Hawaiis. And while the microloans that we're doing with Slow Money, I think, are probably the most important thing we could be doing. Hawaii also really needs a community of impact investors who will take on these larger projects. There are obviously people of more wealth, but there's nobody filling that role. And when you look at grants and government funding, there's just so much of it. There's a great deal of time invested in acquiring those funds, and they fluctuate with economies. What's available, if you talk to people in the philanthropic world, what's available from individuals is practically unlimited. And it's there in good times and bad times. So that's not real relevant to this group, but I just wanted to throw it out there as an aspiration. This, by the way, is FarmLink's website and some of the farms that they're buying from.
Yeah, just to let everyone know, we buy from over 126 producers and are really pushing to try to keep as much food on Kauai as we can. So if you're looking for more Kauai markets, we'd be definitely interested. And especially some of you guys who are newer farmers, we actually have a list of products that are in demand and not being produced yet. So we have a little bit of kind of market business intelligence of what's in demand, and also through the value-added producers and commercial clients in schools and things like that, as well as consumers. So I'd love to work more closely with any of you who are working on production planning, even at that level.
Megan, you can kick me. I should have said everything I said about FarmLink about you too.
Yeah, we do the same thing.
So
With
if
modification.
anybody wants to inquire further about borrowing through Slow Money, just go to our website, slowmoneyhawaii.com, and there's a need to borrow tab where we just ask for some information about you and your project. If you're interested in lending, there's a want to lend tab. And if you're interested in a Kiva loan, we have a Kiva tab too, or go talk to Eric. So thank you. If you have any questions, I'm happy to answer. Otherwise, I'm going to stop sharing my screen now and turn it over to Megan.
Thanks, Mary. We appreciate it. Yeah, we're a little over time, and I want to respect Annie's time here because she has some other commitments she has to go to. What we're going to do is we recorded this session, and we're going to edit it up and put it on our YouTube. So those of you might have popped in a little bit late or may not have been here for it. You'll be able to access it after. And I think Eric and Ryan are probably going to send me some information. Mary, if you want to send me a slide or a pamphlet or a flyer, I can send that all out to everybody who RSVP'd. And we'll also share that on our social media and newsletter when it's out. And, you know, please share with other farmers. I think the more financial knowledge and access everybody has, the better. So thanks for all of you who made time to be here tonight. And we'll definitely, hopefully you'll keep in touch with Eric and Mary and take advantage of these great resources. Thanks, everyone.